Welcome to the May 1st edition of Markets Demystified from ESOP Advisor LLC. I'm your host and the owner of ESOP Advisor, Jonathan Oden. This edition, Bitcoin halving may not have intended effect. Block chop. Bitcoin's creator focused almost exclusively on scarcity as related to value and programmed events called halvings to reduce the number of new Bitcoins that can be created from mining. Halvings occur around every 4 years and shrink the number of Bitcoins created from mining by half. The latest halving happened last month on April 19th, when the mining reward was cut from 6.25 to 3.125 Bitcoins. Crypto proponents suggest halvings are correlated with Bitcoin prices, causing them to rise. However, because the events happen just once every 4 years, it only provides a small sample size. Also, there have been just 4 halvings so far, which is a small number of observations to use when calculating correlation over 11 years. Diminishing effect. Bitcoin supporters claim that the increased element of scarcity introduced by the halvings support the value of Bitcoin. However, though halvings limit the growth of new Bitcoin creation, they do not reduce the number of Bitcoins. The number of Bitcoins still increases, just at a slower rate. Additionally, the vast majority of all Bitcoins that will ever exist have already been created. Around 94% of the 21 million total Bitcoins that will be mined have already been generated. Though it will take until 2140, there are just around 1.3 million Bitcoins left to be mined out of the 21 million limit. Any price movements resulting from quantity might have been expected to be more pronounced while the number of Bitcoins was lower, with prices being influenced less as quantity increases. Also, the effect the halvings have on the amount of new Bitcoins created becomes less and less with each halving. Therefore, if the halving events did have an effect on Bitcoin prices, the effect may be expected to diminish with each consecutive event. Inefficient. The concept of market efficiency is a way of describing price movements as being influenced by all available information, with markets only reacting to new information. This means information that is already available will already be figured into valuations. For example, if a company announces it will take a certain action on a certain date, investors will account for the effects of that action before it actually happens. The expectations of investors will be reflected in the market price before the event takes place. The actual occurrence of the event may have little or no effect on the company's stock price. Since the effect and timing of all halvings are predetermined and their occurrence is not new information, Bitcoin market participants should have already accounted for any effect the event would have on its value. Efficient markets only react to new information as what is already known has already been priced in by investors. If the actual occurrence of a halving has an effect on Bitcoin prices, it could indicate the market is inefficient. Not having it. Though halvings have been followed by price increases, they did not happen at the same time as the halvings. The price increases that followed the halvings were also followed by steep price drops, which may not support the idea that halvings are a major influence on Bitcoin prices. While Bitcoin and the halving protocol are rooted in the concept of scarcity, scarcity alone does not result in value. A review of the precious metals and currency markets demonstrates that scarcity is not the sole factor in creating value. Bitcoin was intended as a replica of gold, mimicking its scarce nature and its need to be excavated through the labor-intensive mining process. Ironically, Bitcoin is not gold-like in value and has a low correlation to gold prices. Since Bitcoin's creator did not view it as being similar to stocks of companies, it may also be ironic that it has more of a relation to the movements of stock prices than to gold. Bitcoin has had a positive correlation to the stock market for most of its existence and is now often considered as a risk asset alongside stocks. Thank you for listening to Markets Demystified from ESOP Advisor LLC, where we relate investing to personal money management. Visit us on the web at esopadvisor.com. That's AESOP advisor.com, or call us at 940-268-4161. The preceding information is not meant as individual investment, legal, or tax advice. ESOP Advisor LLC advertisements are for informational purposes only and are not recommendations to buy, sell, or hold any asset. All investments involve risk, and the past performance of a security or financial product does not guarantee future results or returns. While diversification may help spread risk, it does not assure a profit or protect against loss. ESOP Advisor LLC does not provide tax or legal services.